Welcome. The government shutdown, tariffs, interest rate changes, these are the topics that often dominate the headlines. But what really moves the market long term are corporate earnings. I'm often asked now, how does the market keep going higher when all the bad things that are going on in the world? The short answer is that corporate earnings remain very strong. And we see that in the latest data. As of the time of this recording, roughly 80% of companies in the S&P 500 that have reported have beat their analyst expectations for earnings per share growth this quarter. Let's take a closer look. And here it is. We're looking at S&P 500 earnings growth rate over the trailing 12 months. What we see all the way to the right-hand side is that the latest number shows a 12% growth rate, which is well in excess of the historic average of 7.7. So corporate earnings remain very strong. And the reason that's relevant is that over the long term, the stock market tends to follow earnings growth. That's what we see in front of us here. The S&P 500 is the thin dark blue line, and the shaded in light blue area is earnings per share. And we see that while there are some variances, for the most part, directionally, there's a very high correlation between earnings per share and S&P 500 stock prices. Now, there are times when the market will appreciate faster than earnings are increasing, and that's what we've experienced over the last 3 years. As strong as corporate earnings have been, market gains have been even greater. So what that means is that valuations have gotten higher. What we see in front of us here is the forward price to earnings ratio of the S&P 500. And the reason why it's trading at a high multiple currently is that despite that strong earnings growth, the market has appreciated even more significantly than corporate earnings. So the Goldilocks scenario moving forward, the scenario I would most like to see, is that corporate earnings remain very strong and the market appreciates, but not as much as corporate earnings. In that scenario, you both have a rising market and a falling forward valuation. Now, it's impossible to say if that's how the market's going to play out. But while everyone else is talking about headline du jour, know that one of the primary factors that we are assessing in positioning your portfolios is the direction of future earnings growth. Thanks for watching. Enjoy today.